to the call. Apologies for the technical issues. We're just about to launch into this 5 critical steps to funding business growth. So apologies for those people who've just been on the line. But let's just go back to where we started. So I've got Marcus Tarrant from Business Planning HQ with me today. And what we're going to be talking about is really, what are the key steps that a business needs to go through to understand their financial growth. So before we get started, welcome, Marcus.
Thanks, David.
Just give us a bit of background about yourself, if you could.
Sure. I've been a strategy consultant for a number of years. I was with Deloitte some time back and then got into the venture capital space. Ran a venture capital firm in Melbourne called Offspring Ventures, which was part of an ASX-listed company, and learned, I guess, some of the insider tips and tricks on what you need to do and how to position your business if you're looking to raise capital, what the investors are looking for and the profile of those investors.
Great. Okay. So really, I suppose what we're looking for is we've got a mixture of people on the call today, a lot of them from the Melbourne area, some of them running businesses that are already existing. Some of them might be in startup mode and they're just really at a point where they want to learn about how they can get funding, and others who are just really, saying, well, we just need some extra cash.
Yeah.
So let's talk a bit about the kind of businesses that you've worked with in the past.
Okay. We've worked with everything from idea stage companies through to long-running family businesses that might have been around 20 or 30 years and are looking to change their capital structure.
Yeah.
This slide gives an indication of some of the capital raisings that we've been involved in. Audinate was a spin-off from NICTA, which is the National Information Communications Technology Authority.
Mm-hmm.
And I shadowed the CEO there for about a month to change their business strategy from a licensing business model to a product-based business model, which is far more acceptable to the type of investors we were going for.
Yeah.
And that resulted in a $4.2 million investment by Innovation Capital in Sydney.
Right.
Ozthink Software was a spin-off from Melbourne University, another software company, and we helped them raise $4.1 million. And that was an interesting deal because rather than one significant investor or one venture capital fund, it was 10 small investors, individual investors that were investing in that business. Some smaller deals we've been involved in is things like Stamp Me, where we produced the offer document and assisted them with a $350 raising. They listed on ASOB, which is the Australian Small Scale Offerings Board, which is one of the best platforms in Australia anyway for raising low levels of funding from private investors.
Sure. Okay. And I noticed that you've got some other sort of industries there, some devices and some mining.
Yep.
Can you give us a bit of a sort of perspective on those as well?
Okay. Within the device space, so Credit Key came out of the ANZ Innovis program in Adelaide.
Yep.
They've just gone on to raise $100,000 in equity funding as a seed round,
Mm-hmm.
and we'll get into the different terminologies for each of the rounds shortly.
Yeah.
Cleantech UV is a device for scanning bed bugs in hotels.
Okay.
And cleaning those up. So I work with a lot of different devices, companies, and profiles.
Excellent. Okay, let's flick through and have a look at some of these other. So these are the partners. So when you talk about partners, you're talking about funding sources?
Can be. ASOB is a funding source. Waira is an incubator, so we support them and they support us. So they provide access to their startups because our planning process has helped them raise a lot of capital themselves.
Yep.
So we partner with incubators, accelerators, and people that are looking to attract funding because we have a process and method that successfully achieves those outcomes for them.
Fantastic. So tell me a bit about how this would apply to an existing company, so not a startup, someone who's been in business for, say, 2 or 3 years.
Yeah.
How do they go through these processes of acquiring capital?
Well, there's a number of options, and it really depends on the type of company and what they're looking to do. If they're looking to perhaps grow internationally, or they've got a proven product or service that they're distributing here and looking for international growth, then private investment is definitely a feasible and viable option.
Right.
Bank funding could be another option if the founders are willing to take on additional debt and risk at the director level.
Okay. Okay, excellent. So maybe let's look at some of the case studies that you wanted to discuss today.
Sure.
Maybe start off with this one here.
Okay, so, and we will get to the 5 critical steps shortly, and they'll give you some clear and concrete things to work on. But I just thought it was important to go through what a deal actually looks like and how they're prepared and how we work through them.
Sure.
So Audinate was a licensing company. It was a spin-off from Nectar.
Yeah.
They were licensing their technology to major players such as Bose and BASF and Yamaha Audio.
Mm-hmm.
And we sat with them and really changed their mindset about what their business was to turn it into a product-based business rather than a licensing business.
Okay.
And the reason for that is in a product-based business, we're able to own the customer. We're selling a product to an end customer. In a licensing business model, we're giving that power to someone else.
Right. And that impacts the ability to be funded?
It does, because what we're trying to do, particularly in a private funding situation, you've only got a couple of ways of that investor getting their money back, either via dividend or via an exit. Exit's the most commonly desired mechanism for obtaining a return.
Yep.
And to obtain a high return, you want to create competitive tension in the marketplace that forces one of the major players to take you out.
That's right. So what you're saying is someone who's looking to fund their business growth really needs to be thinking about that when they're structuring the business.
Absolutely. Think about the end when you're at the beginning.
Yeah.
And just think about, how's this investor going to get a return on their funds? What's the liquidity event that's going to drive them to get their money back? And what sort of time horizon is that likely to be in?
Right.
So if you sort of think about it as a runway, your funding gives you a runway, and how high will you be at what point in time after that takeoff for them to get what level of return in association with that.
Fantastic. Look, what we're going to do is we're going to open up to questions as we go through this presentation today. But if anyone has any questions along the way, if you just type them into the questions box on the right-hand side. We have got time for questions towards the end, so we'll try and get through those if we've got the time. But let's keep going on some of these examples as well.
Sure. So this was a little bit of a different deal. This was hired by Starfish Ventures in Melbourne to assist them raise some funding for a company called AusThink Software, which was a spin-off from Melbourne University.
Yep.
And the challenge there, and one of the challenges, this business had been around probably 3 or 4 years. It was going slowly somewhere, but in terms of actual profitability, it was at a very low ebb.
Yep.
So the objective was to orient the structure to a more profitable segment of the market, and therefore build the value proposition around that.
Right. So that's really, once again, in the planning stages.
Exactly.
And how you present the deal to the potential investors.
Yes. And presenting, doing more of the same thing, particularly if you're an early stage opportunity that's proven something but haven't actually proved the commercials. You need to have a commercial strategy in place that's going to demonstrate how you're going to actually make money from it.
Right. Excellent. Okay. Let's go on to the next slide.
Okay, Ophidium was a much smaller deal. This was a spin-off from Monash University.
Yeah.
Very large-scale opportunity, changed the way that optical networks can operate. And again, this was about determining the value of the opportunity at an early stage. So what problem are we addressing with this particular technology or opportunity, and how are we how much is that potentially worth to someone else in the marketplace?
Okay. So really, if I'm an investor, if I'm looking to put some money into a business, what I'm looking for is a return.
Exactly.
So the business plan really has to stipulate not my goals of what I want to achieve in the business, but more about what return on capital invested I can return to someone who's actually not that knowledgeable about my industry.
That's right. And the driver of that is really the problem that you're solving and the value of that problem to someone else. Right. So to build your own distribution channels, for example, is a very expensive process. But let's say you were Ophidium and you sold your opportunity technology to someone like Siemens with massive distribution.
Yeah.
You've then you've got a completely different value of that business compared to what you're able to achieve on your own.
Okay. Alrighty.
And that's really called obtaining a strategic valuation rather than an EBIT-based valuation.
Okay, so it's really about what the projected income can be.
Yes.
And sort of the strategic plan needs to have a bit of a roadmap, sort of identifying or articulating what the strategy
if you can have a think about who is in the hands of whom is my business worth more than to me. So
Right.
who could buy this and suddenly turn it into a $50 million, $100 million business? And they're the people you want to be thinking about and positioning and structuring for an acquisition early,
Right.
if you can, if you're looking to exit.
Yeah, very cool. Okay, so let's talk a bit about Ceram.
Ceram Polymeric was a really interesting technology company. It owns some intellectual property. So if you imagine a polymer as a plastic,
Yeah.
and you put that plastic under fire at 300 degrees Celsius, it turns into into a ceramic.
Okay.
So they were using it for insulation in fire doors and things like that. So I assisted them in building their pitch. Usually founders, when they're putting a pitch together for investment, go into the technology in way too much detail.
Right.
They're usually technically oriented or product oriented. And what we did here was compress was about a 60-page technical presentation into an investment style pitch,
Right.
which tend to be about 16 slides in total.
Okay. So really, I suppose part of your role in that situation is to actually extract the value proposition once again.
Exactly. And often they'll completely miss it, or it'll be embedded somewhere in the nub of what they've got, but they haven't really got to the core of why this is valuable from an investment perspective.
Right. So that's a big gap that needs to be filled. Okay, let's move on to the next one.
Okay, so moving on to the 5 key steps for obtaining funding for your business.
Yeah.
The first step is to really work out where you fit in the zoo. This is a fairly well accepted model globally in terms of the amount of money you're looking for.
Right.
So the first thing to do is work out how much money you need.
Yep.
And that isn't necessarily as easy to answer as you might think. So because it's strategy dependent. So if you're planning to, say, enter the US market, you might need $500,000.
Right.
But that's not your only strategy. You could, say, enter New Zealand for $50,000 or $100,000. So there's a number of factors that go into trying to identify what is the right amount of funding for my business, which is very dependent on the strategy.
So really what you're suggesting is before people even build a strategy, they need to identify how much money they're after?
Well, it's almost an iterative process.
Yeah.
What we tend to do is we'll build a number of different scenarios. So we might say scenario 1, expand into the US. Scenario 2, expand into New Zealand. Scenario 3, do this. And from that, extrapolate where the exit value is going to be in the business.
Right.
And which strategy to pursue, or which strategy is more saleable from an investment perspective. So it might actually be harder to get $30,000 to enter the New Zealand market than it might be to get $100,000 to enter the US.
Right.
Just as a rough guide.
Okay. So really, you've got it. You're sort of looking at this as in depending on the amount of money you're looking for, depends on how you're going to go about getting.
Yeah, and where you fit and who you're going to talk to about it.
Yeah.
So you might have. So we worked a long time ago with a concrete company here in Melbourne, and they developed a new product. Are they going to launch that in Victoria only? Are they going to launch it nationally? Are they going to license that technology internationally and expand globally? Are they going to create distribution channels in different countries?
Okay.
And all of those options have entirely different cost profiles associated with them.
Yep.
And that dictates ultimately who you go and talk to about raising funds for this business, whether it's obtaining a government grant might get you started to a certain level.
Right.
Obtaining bank funding might get you to a certain level.
Mm-hmm.
Obtaining private funding from angel investors or angel groups might get you a different level of funding, and so on. So it's really about, this slide, I think, is really why it's not step number 1 is you need to sort of work out where you fit.
Right. Okay. So once we've done that,
yep.
Then we move on to the next step.
That's it.
Okay.
So once we've identified how much we need and who we're going to talk to, we really need to identify and understand what these investment groups do and what their valuation is particularly. So the thing with pitching for investment is you only ever get one shot. So if you go into a VC, you give them a pitch and they don't like it,
Yep.
generally they won't say they don't like it. You just don't get invited back for a second discussion.
Right.
So you need to know what profile of investment you're dealing with. So, for example, with angel investors, individual angels in Australia, I can tell you if you're looking at a valuation over 750,000, they won't look at the deal because the amount they're going to invest is between 50 and 150,000, and their percentage of equity is going to be too small on that transaction.
So tell me a bit more about this angel investor. So what is an angel investor?
An angel investor is someone who's been successful in business
Yep.
in the past themselves, generally has a disposable net worth in excess of $2 million, and there is actually a legal classification of what classifies an angel investor and high net worth individual.
Right.
They're generally looking to invest between 50 and 150,000, or as a syndicate up to 500,000.
Okay. And so where do people find these?
There are networks. So there's the Melbourne Venture Capital network. There's one in each capital city. There's
Yep.
also the Australian Institute of, or Australian Association of Angel Investors,
Right.
AAIV, and also just through LinkedIn and other sources. Technically, almost anyone can become an angel investor in some form.
Yep.
And that's where crowdfunding schemes come in, is to really reduce that threshold. So to be an angel investor, you need to have a net worth of in excess of $2 million, excluding your main residence.
Yep.
But for crowdfunding schemes, which are gaining a lot of popularity, and I might just explain, there's two completely different types of crowdfunding schemes.
Right.
The ones that you would have heard of in the media, particularly in the US, things like Kickstarter, are product-based crowdfunding schemes. And then there's only two main equity-based crowdfunding schemes currently. One is ASOB, which is the Australian Small Scale Offerings Board.
Yeah.
And there's another one in the UK whose name I forget. So in an equity-based situation, what you're doing is you're selling shares for money.
Yep.
In a product-based situation, people are pre-buying a product that doesn't exist today.
Right.
And getting an option to have that product at a discounted price in the future.
So crowdfunding is really this whole notion of getting on the internet and promoting your product or service or idea,
yeah,
and allowing people to actually almost donate or pledge online.
Yeah.
Okay.
Yeah.
So that's something that seems to be growing a lot.
It is growing, and it works for certain types of products. And my view is more fad products than serious products, which are more suited to an equity style raising or other source.
Great. Okay, so let's move to FFR.
FFR, friends, fools, and relatives. So if you think of your investment strategy like an onion, start with the people closest to you.
Right.
They're the people most likely to invest at an early stage because they're investing in you as a person, not so much the business or the business model.
Mm.
And as you go out from there, the quality documentation you need and your approach needs to be increasingly professional.
Okay, so really what you're suggesting is for people who are in that sort of business venture where they're just looking for some extra, like 50 or 100,000 or a couple 100,000, the best thing they can do is start knocking on the friends and families.
Yeah, and there are regulations in the way you can do that.
Right.
So for those of you that are interested, if you have a look at Section 708 of the Corporations Act, there are some limitations on what you can offer in terms of shares and to whom you can make those offers and in what format you do that. Family is not a problem, but as soon as you step outside of that to associates and people like that,
right,
you're effectively selling equity, which is basically what the ASX does, and there's a whole bunch of regulation around that.
Great. Okay, so once we've gone through those channels, the next channel to hit up is?
So it might be obtaining a loan. So if you've got an existing cash flow in your business,
yep,
and that's demonstrable as a history, that combined with a future plan is really all the bank will need to make an investment decision on your opportunity.
Okay.
And we've been involved in loans of up to about $2 million
Yep.
for individual companies.
Okay.
Sometimes they require external assets to be listed as on the equity register. In other cases, they don't.
Okay.
Self-financing is an interesting one. I worked in my early days in a startup. Was 1995. I launched a company called Tucker Time, which was a kids' mini meal product, and we actually pre-sold advertising space on our package for $50,000 a seat.
Yep.
And that actually provided the seed funding we needed for that business. So if you can think a little bit creatively about your product or service and who else might have an interest in having a place on that, you may be able to obtain some additional revenue, or extend your creditors' payment periods, etc.
Okay, so that's getting creative and just really using creditors as a source of funding as well.
Yeah, and another way of doing that's to use a factoring company.
Right.
So there are companies out there that will buy your invoices. They'll provide you that cash straight away. So if you imagine you had 30 days cash today, you've automatically got $20,000, $50,000 that you didn't have before you did that.
Right. Okay, understand. Great. So when we move from there, government grants.
Yeah, there's a number of different grants, and grants are dependent on the sort of business you are. So if you're in clean tech, there's a whole range of new clean technology grants that have just come out.
Right.
If you're looking to export, there's Export Market Development Grant, which provides 50% return.
Yep.
There's also a Victorian government grant, which assists with export. There's a whole range of different grant formats. And in almost all cases, some form of business plan or strategy is required to obtain those funds.
So how do people know where to find grants or which grants are eligible for?
There's two main websites. There's a federal one, which provides a guide on business grants, which is on the Oz Industry side. The Victorian one, it's the Department of Innovation, and they keep changing their name. I can't remember what the rest of that title is, but they have there's probably about 30 grants in there. And the other one, interesting in Melbourne, is the Melbourne City Council has a range of grants as well.
Okay. So really, just by googling grants in Melbourne, for example, then people can just start seeing what's available.
Yeah. And it's worth having a look because, there's also a couple of really interesting ones that have just come out. Small Technologies Development Fund, where you put in 15,000 and you get 60,000 back as a guide. So there are matching grants, but there are some that leverage those funds much further, particularly for technology development, those sort of things.
Right. So really, when we're looking at grants, it's typically going to be something that's for either new technology or for export, or for some sort of change in the business model. That sort of
or there's some that are supporting retail industries or sectors that are going through a difficult time. Obviously, farmers are a classic where you have bad weather for a while or what have you. But definitely worth having a look and trying to find out what's appropriate to your business.
Great. So tell us a bit about industry validation.
Yeah, one of the strategies we've employed for capital raising, often professional investors don't know enough about what you do to make a decision on whether to invest in it. So what they'll do is sit back and wait for a major industry participant to say, we're going to invest in this, and then they use that as a validation that what you're doing is sensible and makes sense in your industry, and then they'll provide the financial backing behind that as well.
Okay. So really, it's just about picking your first investors so that you can use that as a bit of a
if you think about your investment strategy as having an industry participant and a professional investor, and bringing those together can really add synergy to the whole investment profile.
Okay, so it's starting to sound like you really need to have a bit of a strategy about how you're going to go and find this investing in the first place.
Exactly. Yeah, and that can really have a big impact on the process and the outcome.
Excellent. So the last one you've got there is the valuation profile and method.
Yeah, I mentioned earlier, if you're looking for angel funding, don't go in with a valuation over $750,000 because they just won't invest.
Right.
And so there are certain rules of thumb with different stages of development of your business as to what that valuation should look like, because that investor is looking to obtain a certain percentage of the company.
Right. Okay, great. Let's move on to step 3.
Okay. So let's just say you said our strategy is to expand into the US and we need to raise $500,000. if I gave you $500,000 today, would you be able to spend it tomorrow? The answer is usually no. What we're going to have to expand in stages.
Yeah.
So to begin with, we're going to hire a sales manager and put him in San Francisco. That's going to cost you a certain amount for a certain period of time.
Yep.
And so what we're trying to do with milestones and tranches is break the investment up into time period stages with performance metrics around each of them. So it might be our goal is to obtain 5 enterprise clients in the United States with that sales manager that we've just appointed.
Yeah.
And we're going to do that within 6 months. And then our investment community knows that that's our target, that's what we're working towards. And if we achieve that target, then they're likely to invest at the next stage and the next round.
Right. So what you're saying is some people may not invest until you've started to achieve some of these milestones that you put in your original document?
Yeah, that's right. Or the ones that have want to see that you're on track to where it is that you said you're going, which is, I guess, just sensible. If you said you were going to, achieve 5 sales and you got 0, are they going to invest further? Probably not. But if they were happy with that direction in the first place and you achieved it, then they're likely to be happy to invest further. So don't think of an investor as a one-off thing.
Right.
An investor is someone who will typically invest a bit now and continue investing in the business down the track.
I suppose it's a bit like going on a date.
Sort of, yeah. That's right. If it's good, they'll come back for more.
Very cool. Okay, so let's move on to the next stage, which is step number 4.
Yeah. So this is a typical mistake a lot of business owners make is they're so excited about their product or their technology that they just focus on selling that.
Right.
What you're actually doing is selling shares in a company. And so your product is the company, and your communication method of what that company is basically your documents, your business plan, your pitch, and the other information that sits around that.
Uh-huh.
So, and your company in the eyes of the investor is really the strategy itself. What strategy are you employing to make money from whatever it is that you have?
Right.
And you need to communicate that clearly to them in terms that they understand. And like any other purchase, if you're purchasing a product, you want to know that it's good value, that it's come from a reputable source, and that you're likely to, not do you don't want it, that there's some sort of warranty or implied warranty as a result of it.
Yeah, so it's an interesting distinction to really not be selling the product, but selling the business model.
Yeah, that's right.
Because from an investor perspective, they don't really care about the product.
No.
Ultimately, what they care about is, are you going to make money for me?
And the way that I see it is, if you think of a diagram, you have your strategy on the left.
Yeah.
In the middle, you have your business model, which is really the engine that translates that strategy into financial results.
Right.
And then you have the financial implications. So the investor will first look at the financials. What are the actual financials?
Yep.
And then how well does this strategy actually stack up and this business model stack up? So if you said, I'm going to convert 1 in 10 leads or whatever your metric was in your business plan, what evidence do you have that substantiates that you've proven that assumption is actually valid?
Right. Okay, that makes a lot of sense. So identifying unique competitive position, I think that sort of is a pretty important point as well, is when you mentioned about building tension in the market or being disruptive, really it sounds like investors are looking for something that's a game changer.
Exactly. Yep. Because that's where the real value is likely to be from an exit perspective. So if you own something that's part of the future and you're part of that future wave, if you're going along doing the same thing, you set up a retail clothes shop that's the same as every other retail clothes shop, your valuation is practically zero. If you're Zara or some other business that's fundamentally changed the dynamics of that industry, you have a much different valuation.
Okay, fantastic. All right, let's move to step number 5.
Yeah, structure. So once you've worked out what investor types are your targets, they all have different preferences in terms of organisational structure. So as business owners, you may have family trusts in place, and you might have an Australian company and overseas company. So when you're identifying who's going to invest in this, think about where are they based.
Yep.
If they're US based, then they're going to want a Delaware company. If they're Australian based, they're going to want an Australian entity.
Yep.
And so have a think about the jurisdiction that you're operating in and where you want the risk to flow. And do you set up a subsidiary company and raise equity into that?
Yep.
Do you have a separate trading company from your company that holds your assets?
Okay.
And think about some of those structuring issues.
So really, that sort of will impact the, I suppose, the viability of the investment as well.
It will, and it has a big impact on the risk profile of the investment. So Australian VCs, for example, love to see patents on an asset register.
Right.
So think about an asset register as a starting point and what entity is going to own each of those assets.
Sure. Makes a lot of sense. Okay, so you mentioned here also assembly of an advisory board. So what's this about?
A high growth business, which we're hoping all of the listeners are or are hoping to be, comes up with a lot of challenges that are often too complex to be solved by one person. So having a board of advisors around you, which might be, you might have a monthly meeting of 3 advisors, for example, where you bounce ideas off them and help them creatively solve some of the key issues you're experiencing in your business.
Right, so that really contributes to the attractiveness of a business.
It does, yeah, because usually they're people with high credibility in your industry or your space. So they might be recently retired, but with a high profile. And they also often will bring in investors themselves. They're usually reasonably well-connected people and able to introduce you to third parties that might be interested in investing.
Right, okay, so getting the board of advisors is really sort of a double edge.
Yeah. It's a really cheap and effective way to sort of get started thinking about the whole capital raising process.
Yep.
And if you so went on to something like ASOB, where with ASOB you need to become a limited company instead of a proprietary limited company.
Yep.
You need 3 directors on your board.
Right.
And the highly successful ASOB advisors select those board members really carefully. And those board members are, I guess, not required to, but generally will bring in substantial funding either personally or through other parties.
Right. Okay, that makes a lot of sense. So really even just the board members themselves can become the investors.
Yeah, that's right.
Great. Excellent. Okay, so it sounds like if you put some thought into it, it really is not such a difficult or sort of traumatic experience.
No, it just takes a bit of time and effort. And one of the challenges is, running a small or medium business is your focus is often on the operational activity. And this is a major distraction from that.
Right.
You do need to allocate a substantial amount of time to capital raising if you want to do it.
Yep.
If you're not going to allocate a substantial amount of time to it, I'd say don't bother.
Right.
Because you've got to be out there working the pavement really to get the funds.
Yeah, I mean, one of the things we often talk about when working with business owners is the value, the effective hourly rate of the activity the business owner is doing.
Yeah.
And, we talk about if you do the work of your business, you're going to be worth the same as a tradesperson doing that work.
Yeah.
When you're doing office work, it's the same thing. You're just replacing an office person. When you start moving to that CEO level or even a management level, you're already increasing your effective hourly rate.
Yes.
Comes to this sort of activity, you're really at that high level of business planning or directorship.
Yeah.
Where you're starting to sort of put plans out there. So you're doing deals more than you are actually working hours.
Yeah, you're working on the business instead of in it. And you need to do both, but, this needs to become something that you say, I'm going to give it significant focus for the next 3 months or whatever it might be.
Right. So let's talk about this bonus step.
Yeah. So the biggest issue, I guess, as a venture capital firm, we had hundreds of people come to us with business plans and say, what do you think of this? Can you fix it? Da-da-da-da-da. The biggest issue is they all started writing a business plan. They didn't step back and go through a structured planning methodology. So when I was at Deloitte, the whole consulting engine at Deloitte is driven by methodology. Right. So we don't talk to a client unless we're taking them through a particular methodology.
Yep.
So I sat back and thought about that, and the reason most business plans are inconsistent and frankly not worth the paper they're written on is that they haven't gone through a planning process before they've started writing. And that's a fundamental flaw. There's so many templates out there and things like that. People just grab a template and start writing. but they'll get to the marketing section and that doesn't quite line up with their operations because they hadn't thought through some of the issues properly, which doesn't line up with the financials, and you end up with a mess. And it usually takes a month to get to that point, and often people will just give up and say, well, it's too hard, I'm going to walk away from it.
Right, okay, I understand. So really it's about the planning, not the plan?
Yeah, that's right. It's about the thinking. It's taking people through a process of doing some thinking about their plan.
Okay, great. So you talk about the strategy in clear and simple terms. So can you just sort of go through what an investor overview is?
Yeah, an investor overview. So these are a set of documents that are designed for capital raising.
Yep.
An investor overview is a one-page snapshot of your business, and it's not your executive summary. It's just pulling out some of the key highlights, and it's designed as a marketing document to get you a meeting with a potential investor, for them to say, okay, tick, it's in my sector of interest. I'm interested in software or concrete or whatever it is. Tick, it's in the valuation range I'm interested in. And really just to get that first sort of set of 3 or 4 ticks and then move to the next stage, which is a meeting. And in that meeting, you typically deliver the pitch pack. And after the meeting, if they're interested in the business, you may get them to sign an NDA, you may not. You leave behind your business plan.
Okay, so in order of priority, really, the investor overview is basically a letter that's going to get you in front of the right people. The 16-slide pitch pack is really about having some form of presentation where you can actually explain to people the investment model and what it can return. Then the business plan is probably the more detailed document that sort of gives people the financials and all the structure and all the thinking behind.
And a lot of people don't think about it, but it's usually people go wrong by having those documents inconsistent. So if you have one number in your business plan that's different to the same equivalent number in your slide pack, you've lost the confidence of that investor. So the key is having complete alignment between those sets of documents.
So from an investor's point of view, their expectation is that you actually know what you're doing. And any of those inconsistencies would start to sort of reflect on your ability to actually run the business.
Yeah, that's right. And you know, it just, if you've said, you know, our net cash position is going to be 500,000 by year 5 in one document, and it says 300,000 in another, they just don't know. All of a sudden, they've lost confidence. They don't know what to believe, which one was right, and you end up with this continual sort of auditing process as to where do you see.
Gotcha. Excellent. So really, let's just summarise for those people on the call so they get what they need to do.
Okay, work out where you fit into the industry sectors and the stage of development. Understand your funding source. Who are you going to talk to? And what are their key hot buttons that you need to touch on? Break your raising or your funding up into stages and tranches, and you could do that by combining grant funding with private investment or with bank funding or whatever it might be. Don't sell your product, sell the company. So you're effectively creating a new product, which is the company itself, and you're selling off bits of that. Make sure you've got the right structure for the people that you're talking to. And start planning, not just writing.
Yeah, fantastic. So some really good advice there. Now, like I said, if anyone's got any questions, please put them through the questions section on the webinar. And we're just going to talk a bit further about, what it is. A couple of key things here. You mentioned this before. What venture capitalists don't want you to see. Can you sort of explain that, please?
So I guess from my experience as a venture capitalist and in strategy consulting, developed a methodology that's sort of become a secret weapon for capital raising. And I exposed that to a number of venture capital firms here in Melbourne, in Sydney and in Silicon Valley. And I got the same response from all of them, which sort of surprised me, is we don't want companies to use this because we don't want them to be presented in a professional way. We just sort of want to see how they are. And so they were sort of looking at it as, we don't want you to help these companies that are looking for funding. We just want to see them as they are. But from the other side of the picture, from the companies looking for funding, it's effectively become a secret weapon that works for raising capital.
Right. So let's talk about this secret weapon. What is it?
Okay. So, I guess why is it a secret weapon? It provides an unfair advantage in addressing the key issues that an investor has. That's the first thing. So, if you miss a key question or you answer it incorrectly from an investor's perspective, then they're likely to show you the door or not call you back.
Yeah.
It makes the business founder look too good, as if they're a strategy consultant themselves, when usually they're more technically oriented people that have sort of grown the business from the start.
Yeah.
It addresses a lot of the flaws in business plans that most people tend to create just by the nature of the way that they go about it, by planning rather than writing.
Mm-hmm.
And most business founders don't focus on the business model.
Right.
And some of those issues I mentioned earlier, with whether it's a licensing model, product model, or what have you,
yeah.
And they don't know how to explain that. And there's been a lot of recent development in business model theory recently that enables a clearer explanation of that. And most founders tend not to sort of be aware of those types of issues.
Right.
And there are certain key financial metrics they want to see, certain valuations, certain valuation methodologies embedded in the planning that are critical to their decision making.
Okay. So let's go through what this secret actually is.
So, starting with does it work, and here's a couple of concrete examples of some work that we've done. We did some work for the ANZ Innovis Start program in Adelaide. We took them through a one-day process, and there were 10 companies there. 8 of those companies have gone on to raise $100,000 or more in capital.
Yep.
And one of them actually closed down, which was a good result, because the planning process actually made them aware that the founders were on completely different pages with where this business was going. So it was a good way of bringing them together in terms of where they're going.
Yeah.
I've run a number of sessions for Wayra, which is part of Telefonica. This one was in Mexico City. We did 11 companies. One raised $350,000 within 2 weeks, and 8 are currently in due diligence with venture capital firms. Okay, so we've had a pretty good success rate with this process.
Okay, so let's talk about what that process actually is.
So the theory was, what if I could virtualize a consulting process by asking you the questions that a venture capitalist or an investor needed to understand, and then I could take your answers and format them through into the series of documents that you need in order to obtain funding.
Yeah.
And it really is that simple, that you just answer the questions that you're likely to be asked anyway by the investor, but we actually embed those answers into the documentation.
Right. Okay. So really, it's just about sort of going through this particular process, which is written almost from the perspective of venture capitalists.
Yeah, exactly. So what's the secret? We take you through a proven planning methodology. It's really all about the methodology, the process, and the questions themselves.
Sure.
So you just answer, as a user, 80 key strategic questions about your business.
Yep.
Fill out a cash flow worksheet, and you're done. And that process takes 4 to 6 hours.
Okay. And
then we create the documents for you, because we know where we need to refine certain things and what have you in terms of what you've said.
Right.
So we take you through scoping the business, for example, which you'd never typically do if you're writing a business plan. But what are the actual boundaries of this business? What are the assets that sit in it?
Yep.
How does it work? And then we try and build the proposition out from the customer. So what's the customer problem? Mm-hmm. And how are we actually addressing that customer problem in the marketplace? Right. And then we build the business proposition out from that customer issue.
Yep. So it's really like working through a structured series of questions that's going to essentially what an investor would be asking.
Yeah, that's right.
Excellent. And this process, so you go through this process in a workshop environment? Yeah,
we offer 2 means of delivery. We do a workshop, which we've got one coming up on the 19th of April.
Okay.
And it's also can be done as a self-guided process with embedded videos that people can do in their own time.
Right. Okay, so let's go through how it works.
So this is a screenshot of inside the tool. The questions are dynamic, and basically you just go through and answer the questions, and then we create your business plan, pitch pack, and investor overview for you.
So you'll do the whole thing?
We do all the documents. So you don't even see a document. You don't have to touch a document.
Yeah.
We do the document creation.
Great.
And you get those documents in Word and PowerPoint, so you can edit them or add to them if you need to.
Okay. So So, go on, let's go through this.
Okay, so as I mentioned before, it's proven to raise capital obtain grants and bank funding in difficult economic circumstances.
Yep.
It's fast. It takes you less than a day of your time.
Right.
So we do it in a 3/4 day workshop, or you can do it in your own time as and when you want.
Yeah.
For us to create a business plan for you from scratch without this tool usually starts at about $20,000. We did a $30,000 one last year. However, the tool really brings the cost of that down to under $1,000, which is a massive time and cost saving.
Yeah.
And we've got a special offer for the next 24 hours.
Well, let's talk about that.
So we have two means of delivery. The Capital Access Package, which is a download. It's based in Excel, so if you've got Excel 2007 or later, just download it and away you go.
Yep.
Or the Business Planathon, which we've held in London, Dublin, Silicon Valley, a range of different places.
Yep.
And they've all had really successful outcomes in terms of capital raising, and that's on the 19th of April.
Okay, so that's about 4 weeks away.
Yeah, in a month from now.
Yeah, fantastic. So what's the deal?
So the deal is the recommended retail of the Capital Access Package, which includes the tool, a consultant-created business plan, consultant-created pitch pack, and investor overview, is normally $858. For the callers today, we're going to offer a 30-minute bonus consultation on top of that, and a discount of $200 off that. So the total value being $1,023, including GST.
Yep.
But in the next 24 hours, just $638, including GST.
Fantastic. So,
which, if you sort of look at the options, getting a consultant or what have you to create the same level of documentation, it's a massive saving off.
Yeah, I mean, considering really what people are looking for is just the money.
Yeah.
In the end.
Yeah.
So getting a consultant on board really, when all you need is some documents to give to the funding sources to actually tick a few boxes.
Yeah.
It sounds like a much more effective way to go, but probably more importantly is the time.
Yeah. I mean, people, I'd say, I don't have the exact statistics, but I'd say 80% of business plans that are started never get finished because they're continually iterative, whereas when you drop it into a methodology and process, you fundamentally change the nature of that iteration.
Yep.
And so with our tool, we get 100% completion. Anyone that starts it finishes it.
Right.
And there's a whole bunch of testimonials, including videos and what have you, on our web of people that have gone through the process.
So I'm intrigued about this planathon.
Yeah. It actually came out of an event which I ran for Dale Beaumont last year, where he said, I've got 78 companies and they all need business plans. Can you run a session for me? And I said, yeah, I think we can. Take everyone through the process,
right, and
then generate their documents for them. And at the end of the one day, they get their business plan pitch, or in that case, it was just a business plan on a USB stick.
Yep.
At the end of the day. So they get their own USB stick when they come in. They get to meet other founders of businesses because they're all CEOs. You don't have junior staff or whatever you're doing your planning for you.
Yeah.
So they get to network with people of a similar level and get the document done in the day. So it's a very productive and energy-packed one-day session.
Yeah, fantastic. Okay, so the cost of that one?
$695, including GST. It's normally $895.
Okay. So really, that's something where someone can walk away at the end of the day with all these documents on a USB stick.
Yeah.
So it's done in a day.
Yeah, and I haven't mentioned there, but for the people on the call today, we'll throw in the pitch pack and investor overview as well.
Okay.
If they book in
so
the next 24 hours.
The full 3 documents.
Yeah.
So look, there's some websites on the screen there, but what we'll do is also in the email that follows up this call, we'll send out the link so anyone who's interested in this, they can register online.
Okay.
Yep.
Sounds
That'd
good.
be good. Look, there's Marcus's details on the screen right now. I am conscious of time. We're just coming up on the hour. So, look, if anyone does have any questions, maybe shoot them through on an email. I'm sure Marcus can answer those and he'll respond to those as soon as he can. But other than that, look, if you jump onto Business Planning HQ or if you respond to the links that are coming up in the follow-up email that'll sort of follow at the end of this webinar, I'm sure that Marcus would answer any of those questions as well.
Sure.
So, look, thanks very much for your time today, Marcus. Some of the tips there have been very useful for the guys, I'm sure. Really getting money when you're in business is one of the hardest things I think people come to terms with. But having